I don't think we'll see house prices fall in Metro Phoenix in 2020. Let me explain why. Hi everybody, I'm John Wake. I'm a real estate agent with HomeSmart and a real estate numbers geek. Today I'm in Chaparral Park in Scottsdale. I have a ton of graphs on my website based on CoreLogic's Case-Shiller home price index. I slice and dice those numbers, some prices, a lot of different ways. I adjust the index for inflation so you can see how the real inflation-adjusted home prices change over time. I also changed the baseline year from the default year of 2000 back to 1995 so you can see how the whole great real estate bubble started. I also have, in the same way, versions where I moved the baseline year all the way back to 1990 so you can easily see home prices and how they reacted to the savings and loan real estate bubble. A recent project of mine was to see how mortgage interest rates affect house prices. Or, more accurately, how mortgage rates affect the homeowner's monthly mortgage payment. Obviously, lower mortgage rates make monthly mortgage payments lower, but I didn't know how much lower. Did they lower the monthly mortgage payment a lot or a little bit? I wanted to find out what it was in dollars and cents, so I went on this big project. Here's the 30-year fixed-rate mortgage rate. It fell from 9.8% the first week of January 1990 to 3.3% last week. The red line shows how much that fall reduced the principal and interest in 30-year mortgages. For example, your monthly principal and interest payment per dollar borrowed is only 51% of what it would have been per dollar borrowed in 1990. Okay, the Case-Shiller home price index is based on the cash sales price of the house, so I apply that mortgage rate adjustment to it so we can translate that cash sales price into a monthly mortgage payment price. Here's what it looks like for Los Angeles. The nominal Case-Shiller price almost tripled from 1990 to 2020. But when we adjust for the lower mortgage rates, the actual mortgage payment price only increased 75%. But there was also inflation between 1990 and 2020. A dollar in 2020 is only worth about half of a dollar in 1990. So when you adjust for both inflation and mortgage interest rates, that is, when you look at it from a real monthly mortgage payment point of view, it turns out Los Angeles house prices are less expensive now. In fact, February 2020 prices are only 74% of January 1990 prices. Of course, 1990 was the top of the savings and loan real estate bubble. It was not a typical year. It was a bubble year. Using this price measure, Los Angeles house prices are higher today than they were during most of the 1990s and from about 2009 to 2016. But real monthly mortgage payment prices for Los Angeles houses are significantly lower today than during the great real estate bubble or the S&L bubble. That's a big reason why I say house prices are not likely to fall in the US as a whole in 2020. According to this way of measuring prices, almost all the cities here are much cheaper than they were at the peak of the great real estate bubble in 2006. Great. In the comments, tell me what you're seeing in your area. I'd love to hear it. And if you don't already have a favorite real estate agent and you're looking for one to help you buy or sell in this crazy market, just go to realestateDecoded.com and click on the link near the top right corner. Just tell us what you're looking for in your real estate agent and we'll research agents that meet your personal criteria. Thanks everybody. Be safe. Take care of yourself. It's a great evening out here. Holy mackerel. Let's see if you can get a picture of this sky. So there's also in Chaparral Park these fields, baseball fields. Of course, they're closed now because of Corona. Take care.